money concepts and the differences between smart money and retail. But today, like I said, what I'm going to be doing is breaking down some of the trades, breaking down some of the charts. And what I'm going to be doing, I'm not going to be rushing into them. I want to fully break it down and fully like break it down and strip it right back. So please take notes. I've got this call recorded. So if anyone does need this recording afterwards, I can get that sent out to you guys for sure. So what I'm going to do, I'm just going to share my screen. Amazing. So I got 3 different setups I want to share with you guys today. Cool. Amazing. So you should be able to see my screen now. So some of the setups I got, the first one I want to cover is AUD USD. So like this setup is absolutely crazy. And I want to show you guys the power of understanding higher time frame and correlating that with lower time frame. So first thing I want to do is start off on the higher time frames and break it down from start to finish, exactly what we are looking for and exactly what I'd be looking for if I was to enter these trades. I didn't actually get in this trade, but it was set out this morning. Jordan and Kichi actually broke this trade down very clear. So big shout out to you guys. So yeah, AUD USD, what we can clearly see, if you're looking at this chart now, blank chart, what we can clearly see, we're heavily bullish right now. Like we've been going up for a long time. Like since the pandemic hit back in March 2020, we've just been bullish ever since. So with a market like this, when it comes to using the higher time frames, what you got to understand is the daily time frame, the weekly time frame, even the monthly time frame. This is all going up. Like this is all going up. So this is the most important thing to sort of understand, like what your higher time frames are doing. Once you understand what your higher time frames are doing, this is when you can start breaking the lower time frames down, looking to capitalize on these higher time frames, these higher time frame entries. Cool. So some people in the waiting room. Cool. And guys, what I want to do is with this call, let's make it a bit more of an interactive call. So any questions you guys got, please plug them into the chat or save them towards the end. And I will cover all questions at the end. Let's make it a bit like a Q&A sort of call. So you guys have, so I'm just letting people in the waiting room. Cool. So yeah, AUD USD is very bullish. We can see it's been bullish for a long time. When you start breaking down the time frames, we can see again it's very bullish. We've had a big pullback in terms of the 4-hour chart, and then what we're doing recently is pushing higher, and we've also broke structure within this range. Some of the stuff I'm going to be covering, guys, it's going to be advanced, like it's going to be in depth. I'm going to be fully breaking it down as if I was to be taking these trades. And like I said, take it with a pinch of salt, don't get too confused. And yeah, just really sort of take notes and try and understand. It might not click today, it might not click tomorrow, it might not click in a month. It might take you a couple of months, but once you get that breakthrough, you've got that breakthrough. So this trade, right, this chart, what I've actually seen on the 4-hour chart is this. Like you can see price is pushed up. You got this higher low, higher high, higher low, higher high. And price is starting to make this downward trend. It's broke structure. It's broke structure. Here we got this lower low, lower high, lower low, lower high. We actually broke that structure right there. And then what we are seeing now, we've also broke structure to the upside on the 4-hour chart, bear in mind. So we'd be looking for buys. So some of the analysis that we've done is this. Like this is over the past few days of the trades you could have caught. And when I break these down to you guys, like I think you're gonna be shocked in terms of what you actually could have caught over just the last few days alone. Like you don't need to be trading ridiculous amounts to get big rewards and big gains on your account. You don't need to be trading loads. 3 trades on you would have grown your account over around 200%, 300% just from these 3 trades alone. Very powerful. So what we can actually clearly see, price is pushing down, lower low, lower high, lower low, broke structure right here, broke structure right here. And if you're new to this, if you're new to like the way I'm sort of teaching right now, one thing I always say is structure is key. Like structure is the most important thing you guys got to understand. Before you work out any point of interest, before you work out any entries, you need to work out structure. Right here, we broke structure. We obviously had internal breaks of structure on the inside, but on the 4-hour chart, we've had this break of structure right here. Price is pushing up, and this is where we can start to look for our trades. So on the 4-hour time frame, let me drop it down to the hourly and explain some of these steps, okay? So once we're understanding structure, let me just get my pen up, cool. So once we're understanding structure, what we can clearly see, price is pushing up, higher high, higher low, higher high, higher low, and then we've made a higher high all the way up here. So that's the higher time frame structure. So if you was on last night's call, what I covered is some points, some interest, and I also covered things about structure too. Now, what actually happened on this right here, you've actually identified something. So this 1-hour point of interest, what I said on last night's call too, the best time to get into a trade is at the end of a pullback and at the start of an impulsive move. The end of a pullback and at the start of an impulsive move, that is the best time to get into a trade. End of a pullback, the start of an impulsive move. Very, very important to understand. Now, what we can clearly see is happened right here. We've pushed up, made this higher low, higher high. We've identified this point of interest down here. This is a 1-hour demand. So this is a 1-hour point of interest where we'd be looking for buys from. We are not looking for buys straight off this area. Once price gets into it, we are not looking to buy it straight up. Like, we are looking for lower time frame entries. So once price actually pushes into here, which it did there, cool. Let me just try and make this a bit more clear for you guys. So what you can clearly see right here is this. So price is actually pushed away from this area. It's tapped into this red box. You might not be able to see it clearly because where I've drew the boxes, but let me just move that back. But it pushes into this 1-hour box, pushes into this 1-hour candle. So this is where we can look on the lower time frames now to catch our entry. So let me just drop to the 1 minute and show you guys something. Cool. So what we can clearly see right here is if you're following structure and you're looking at structure, this is why it's very important to have your time frames marked out and your points of interest marked out. So it's actually broke structure here too on the minute time frame. We got this lower low, lower high, lower low, prices broke structure, but it doesn't mean nothing. Like, it literally does not mean anything because we're not within that point of interest. But what you can clearly see right here, it taps into this point of interest here. It taps into this red box. That's our 1-hour point of interest. So let's look at the structure. Let's look what structure is doing. So we got this lower low, lower high, lower low. Price is broken structure. Price is broken structure now. We can clearly see that we've got a perfect candle. We're on the 1 minute time frame. We've got this perfect candle right here. Entry off the open, stop loss below the wick. Let me just check this. That's to where our target is at the high, which I'll explain. We got a 1.5 pip stop loss and a 1 to 35 risk to reward. So what you can clearly see, if we scale through the time frames, what I always tell people and what I covered on last night's call is the importance of scaling on the lower time frames. So the lower time frames for me count as the 1 minute, the 2 minute, and the 3 minute and the 5 minute. So 1 minute, 2 minute, 3 minute, 5 minute. So this is what I count as the lower time frames. 1.5 pip stop loss, yeah, 1.5 pip. That's pushing it too. So 1.5 pip, like, that's pretty big compared to what we can catch, which I'm going to explain later. So 1 minute time frame, price is broken structure. We would have taken entry right off here. But if you look what happens, prices come back down to entry and touched us again. And this is why it's very important not to go and break even so soon. because it'd stop you with this. It just stopped you out. Like if you broke even your trade, set your stop loss to break even, it would have stopped you out right here. So it's very important to understand when to move your stop loss to break even, and when to fully go break even on a trade. For me, I use the higher time frames. I correlate that with the lower time frames, and that's when I move to break even. I don't go in terms of when we're 20 pips in profit, when we're 30 pips in profit. I don't go off that rule. I go off structure. So what you can clearly see is we would have been entered into this trade. We would have set a buy limit, or you could have market executed. For me, I prefer buy limits. And what you can see, price has just played off very, very nice. Overall target for this is up here. We just targeted the high. So this would have been our target right here, the high. We could go up higher, further, but you got to think of this as if you're within the markets right now. Not if you're back testing, not if you're doing it from weeks ago. You gotta put yourself in a position where if you're in the markets right now and you're trading right now. It's easy to say when you're back testing, it's super easy to do that, but when it's the live markets, it's a completely different ballgame. So what we can clearly see, okay, prices hit take profit 1 to 35, done 1.6 pip stop loss, 50 pip take profit. Like what I always say, pips don't really mean a lot. Like pips don't mean a lot. Risk to reward is what's going to grow your account. That's a 1 to 35, risking £1 to gain £35, risking £10 to gain £350, risking £100 to gain £3,500. Very, very powerful. How long did it take to hit take profit? It took 2 days, 2 days and 12 hours to hit from the point where you ended at to the point where it hit take profit. Now done. That trade's done. 1 to 35 bagged. Nice 35% account growth for that. If you used 1% risk. Okay, cool. Let's follow this on. Let's look what we're doing. Ignore all these drawings for now. Ignore all this drawings for now. Cool. There you go. That's a little bit better. So we're following structure. We're following structure. Higher low, higher high, higher low. Now let's look at the structure up here. Let's look at the structure up here. Okay. So this is telling me something now. Like this is telling me something now. So we've fallen structure, higher low, higher high, higher low. Sorry, my bad. Higher high, higher low, higher high, higher low, higher high. What you can clearly see is this right here. Price is broken below that, which means that's a break of structure. That means that's a break of structure right there. What you can see too, once we've broken past this point, we can identify other points of interest. So what's right here? We've got imbalance before this candle. We've got an imbalance before this candle. That can be a point of interest. Let's have a little look. So once prices come into this point of interest, you can clearly see it's just wicked into that point of interest. You can clearly see it's just wicked into that point of interest. Let's drop to the smaller time frames and see what we've got. Cool. So guys, bear in mind, this is my 1 hour or 45-minute point of interest, this red box. Very, very simple. Prices come into it, just tapped into it very, very slightly. Just tapped into that very, very slightly. And then what do we get? We break structure. We break structure. Look at the time it breaks structure. Like, look at the time it breaks the structure. If you can see the time frame at the bottom here, can anyone tell me what time that is? That's London Open. That's the London session opening. So when you correlate in time and price together, it's a very strong confirmation. You can go and back test this. Correlating time and price is a very strong confluence right there. We've broken structure. Now we identify our point of interest. This is standing up to me on the 1 minute time frame. We've got the imbalance before it. take entry off the wick. That's a 1.1 pip stop loss. From the open to the from the wick high to the wick low, so 1.1 pip stop loss. Let's scale through the time frames. Right, okay, so we're on the 2-minute time frame now. I can see this candle. We got imbalance before it, so that's valid. That's a pretty valid trade to take that on. If we were to use that, that'd be 1.6. On the 1 minute, it's looking very, very clean. Let's see what we got. Okay, cool. Can you see that? It has come in and filled this. You can see this. You can see this line. Like, see this line on the box. That means it's entered. That's hit the entry, and then gone from there. Amazing. But let's go back to this. Let's go back to this. What did we get before this happened? Before we identified this point of interest, what happened? We broke structure. So we are now doing something called hedging our position. We are hedging our position. We have broken structure. This was just a short-term buy up to our sell area. So we've identified another point of interest on the hourly time frame. Let's mark this out. So this is our 1 hour supply. So 1 hour selling point of interest. Just mark this out. This is where we can use to take profits. Let's drop the time frames and show you guys what happened. Cool. Take profit hit 1 to 23. Risk to reward. Bagged. Very, very simple. Very, very nice. Played right into our 1 hour point of interest. Cool. Played one. So that's our position hedged. Like, they call it ping ponging. So we've just bought to sell. Remember, like, this is the key right here. This is the key right here. That breaker structure. That's the important thing that we've had to identify. We've broken structure. So again, we do the exact same thing. We do the exact same thing. We've marked up our one hour point of interest. 1 hour point of interest. Can't get my words out. We've marked up our 1 hour point of interest now. Once price comes into here, we do the exact same thing again. Drop down the time frames, look for our entry. Okay, cool. Let me just move this over. Cool. So look at structure. Look what structure is doing. So you can class that as higher high, higher low, higher high, higher low, higher high. Structure still valid, structure still valid, structure still valid. Bang, we broke structure. We broke below this higher low. We've broken structure. Now what do? We identify our points of interest on the lower time frames. So what I've got right here is this. We've got a thing called our first and our final point of interest. So right here is our first point of interest. Right here is our second point of interest. So in a situation like this, what would you do? What would you do? You got 2 points of interest. Like, how would you deal with this? You simply split the risk. So if you risk 1% normally, you'd split that between 2, leaving you with 0.5% each. So what you would do is you would risk 0.5% right here, and you'd risk 0.5% here. If that claps, you've lost 0.5%, and you know then it's going to be coming into there. So it's be coming into there, okay? Let me just go back on these. So the reasons why we've chose these areas, look what's before. We got that imbalance right before it. This is our refined smart money funded candle. This is our refined smart money funded candle. So right there, from the open, from the wick to the top of that wick, that is 0.6 pips stop loss, 0.6 pips. And then the second one, if we was to take entry off that, that would be, I think, around a 1 pip stop loss, 0.7 pip stop loss. So we could have set a sell limit right here. Price hasn't come into it yet. Price has come into it. It's activated our sell limit. Melted. Very, very clean. See what time that played out? That played out around 12 o'clock. 12 midday. 12 midday. So this is a, like, these setups, what you could have done, I can see Jordan just mentioned in the chat, what you could have done is either risk 0.5% each right here, or what you could have done is stop loss above the top there, just in case it does come to that. So you're going to be still within the trade. And obviously if you've done that, then that would be a 2.2 pip stop loss, 2.2 pip stop loss. But we've got a 0.6 pip stop loss at the moment. And what do we do? Like, let's have a look at the targets. This is the importance of identifying structure, okay? Let me mark this out. Let me turn these off. Cool. This is the importance of identifying structure. Let's have a look what we're doing. Like what I said at the start. Higher low, higher high. Higher low, higher high. We have just took an entry from up here, where my mouse is. Now let's identify a point of interest. So this point of interest is this for me. Imbalance before it. We're on the 4 hour time frame. Let's drop to the 45 minute. This one down here. Imbalance before it. So that's what I'm going to be using as my targets. That's what I'm going to be using as my targets. Remember, like we can use the higher time frames as targets. Let's put this back on. So we're in this trade. We've just been entered in, and we're using this right down here as a target. So let's try and make this a bit more clear. We're using that open as the target. That's a 1 to 120 risk to reward. Let's see how it goes. So it almost come and hit it this morning actually, but it's sort of retracing up a little bit more. So what we can do now is sort of look within this leg to see if we can catch another sell off down into here. Then what do we do once it's in there? Like, it's just literally just rinse and repeat. Then we look for our lower time frames to come into this point of interest, break structure, catch entry, bang. Very, very simple. We're just looking for that. What's the accuracy percentage for this strategy? So this ain't a strategy. Like this the way we're trading now isn't a strategy. Like this is a concept pretty much, and it's the way the banks are moving. It's the way the banks are actually trading. But like there's no, like, the accuracy percentage is different to each person. Like a beginner is not going to catch these type of entries straight away. Even an advanced trader is not going to catch these entries straight away. So there's no sort of accuracy percentage you can put on it. But just understand, you can lose a lot more trades than you win and still be mega in profit. You can lose 10 trades, 20 trades, even 30 trades in a row. You get that 1 to 30, and you're back to break even. Do you wait for a retest after a break of structure for entry? So what we actually wait for on the lower time frames, we wait for that lower time frame break of structure, then we identify a point of interest, exactly like what we've done up here, what we've done up there. So that's AUD USD. I'm just going to cover USD CAD super quick. Cool. So USD CAD, you can see this has been pushing down for a long time. We've been pushing down for a long time. And let's identify what we're doing again. Lower low, lower high, lower low, lower high, lower low. Price is broken structure. We've broken above this lower high. We've broken above that. We've broken above. So let's identify our points of interest. Right, we've got this right here. We've got an imbalance before. We've got this daily candle. You could mark that up. I actually marked it up on the 1 hour time frame. So we've got this right here. So this is my point of interest I've marked up. Can you see this very, very slight imbalance before? And this is the candle, H1 demand. This is the candle I've marked up for my point of interest. So let's have a look what price does when it comes into you. Cool. So we're on the 3 minute time frame. You can even go to the 4 minute time, 5 minute time frame, sorry. And then let's have a look what price is doing now. Like if you look at this, like this ain't clean structure. Like this stuff is not clean structure at all. What I always say about too is when it comes to price changing direction, you can look at this sort of rounding off. Can you see how it's sort of rounding off? You get that round off. You can look for that. But for me, like this is the most clear structure right here. We've broken that structure right now. Lower low, lower high, lower low. Price is broken structure right there. And then what we've done is identify this right here. 5 minute point of interest. I think this even plays out nice on the even on a 3 minute point of interest. Imbalance before. Could you go to stuff down here? Yeah, absolutely. You could look down here, but there's not a lot. Unless it's down here, then it's a bit too extreme. For me, this is one of the most cleanest ways to get entries right here. You'd simply ended off the open of that, stop loss below that candle. It's a 3 pip stop loss. But let's have a little look at something. We're on the daily time frame, remember. We've identified this on the daily time frame. Price is broken structure here. We can take profits at the top. We can take profits at the top of this swing. Like this looks really confusing. Like it does look confusing. Let's have a look. Lower low, lower high. Lower low, price is broke structure. We can take profits at the top of this swing. We can take profits at the top of that swing. So that can be used as our take profits. So that's a 1 to 77 risk to reward. Let's drop down to the smaller time frames and see what played out. Cool. The price has now entered us. It's played out our buy limit. Let's move this forward a little bit more. Cool. So this is where we are now. This is where we are currently right now. But what you can clearly see I've done on the 4 hour chart is this. I've highlighted this. I've highlighted this right here. This thing right here is a complex pullback. People can get so confused about this. Really, really confused. But what you've got to understand is what's happened on the higher time frames. What's happened on the higher time frames? Like we've broken structure. We are now pulling back into this point of interest to then go higher. But it does look confusing. It's making all sorts of shapes and sizes. It's making all sorts of structure. Higher low, sorry, lower low, lower high. And there's a lot going on. But we need to remember what's going on in the higher time frames. So this is right here, it's a complex pullback. This right here, this is something from back testing I was doing. Just delete that. So take profits at the top right there. And we are currently around only around 50 pips in profit right now. But if you look at that's like a 1 to 10, 1 to 15. What is going through so far? Overall targets for that is a 1 to 77 risk to reward. And I'm looking for UCAD to go higher, and then GJ. Jordan covered GJ last night on last night's call. But what I want you guys to do, if you've got any questions, please feel free to drop them in the chat box. Like I said, let's make this more of an interactive session, like a Q&A. So feel free to just drop some questions. Can we do this way of trading for gold? Absolutely, yeah, you can, yeah. Also as well, I've been in the crypto market a lot recently, like being heavily invested into that. But I'm trying to work out and trying to back test if you can trade these concepts on the crypto market. There's some things that play out really well and then some things that don't. So it's just a case of just back testing. Gold. I haven't marked up gold. Like, I don't really trade gold. It's in terms of like, it's not something I'm gonna really look at because I don't really like the pair. Is this style of trading called trading with a trend? Not really. No, I wouldn't say it's trading with a trend really. It's just smart money concepts, trading with the banks, trading with the institutions, and trading with the big players of the game. What I'm gonna do, I'm gonna stop my screen share. I'm gonna why is it very hard to grow a small account from $200? The call I done last Thursday, I'm gonna try and get a recording for you. I covered exactly how to grow a small account. One thing I'm gonna say to you with that question, go back to your demo account. Let the products do the talking. Let the products do the work for you. Let the products put the hard work, and let the products make you money. If you're trying to learn a strategy on your live account, you're going to take losses. You're going to get lost. You're going to get losses. That's inevitable. So take that stress off you. Take that stress off you and use the products until you learn the concepts. What I'm going to do, I'm going to pull up something really quick. Cool. So for those of you guys who are new on the call, how long have I been trading for? I've been in the industry of trading and networking since October 2019, so just over a year. What do you look for to find imbalances? So literally imbalances is just where there's a gap above or down below, and that's simply just one imbalance. It's very, very simple. But let me just explain something to you guys. I'll show you guys something. For those of you who are brand new to smart money concepts, this is literally what it looks like to trade smart money concepts. When I seen this, I was like, wow, like it made me realize like the power of it. So what this is actually showing, if you think about the banks, the institutions, the governments who are taking part in the Forex market every single day, using our money, these are the guys, like they're the big sharks. They're the big guys in the markets. They're the big guys in the markets. Now what we want to be, what we are aiming to be is these things right here. These little fish. So what these little fish do is like they just follow the shark around. They just eat off the scraps of the shark. And they're friends with the shark pretty much. They're not going against it. The shark's not trying to eat them by any means. They're going with it. And that's exactly what we want to do. We want to go with the big players, go with the institutions, go with the hedge funds, go with the banks in the markets. And that's exactly what smart money trading is. You're going with the big players in the game. You're not trying to go against them. You're not trying to fight against them. You're going with them. And that's literally what smart money concepts is all about. What brokers? So there's a bunch of different brokers you can use. You can use things like IC Markets, Vantage. You can use like Blueberry Markets, but the most important thing is just sort of make sure it's a raw spread account. Just make sure it's a raw spread account. That's one of the most important things. So then, what you also have to do is also take into consideration your spreads. Like always add the spread onto your limit if you are doing that. Do you utilize fundamental analysis alongside this? Fundamental analysis, like for me, like I'll take into consideration, but it won't be the determining factor whether I do or don't enter a trade. It's there to have a look at. Like I'll look at fundamentals and I'll be right. Like there's this going on at this certain day at this certain time. I'll be wary to trade. So I'll take it into consideration, but I trade what I see. Like if there's a setup in front of me, I'm going to trade that setup because I can see that setup. I'm not going to be hesitant to take a trade because there's a meeting going on in Germany in the next 2 days and stuff like that. Like I'm going to be taking what's in front of me. please can you please the video to cover growing a small account? Is there any VIP channels and how to get in? So yeah, Imperial Global has got a VIP trade ideas chat. Now the VIP trade ideas chat has been absolutely killing it over the last 2 weeks. Like it's been absolutely crazy in terms of the pips it's been getting. Consistently 1,500 pips every single week. You have to be on a silver or above package to get access to this. Silver or above packages, you can get access to this. If you want to upgrade your pack to silver or above and you want to get access to the chat, message your Sapphire leader, whoever your Sapphire leader upline is, message them and they will get you in that chat. It's like for me, it's 100% worth doing that and 100% worth getting this and upgrading. Your account is going to grow when you're utilizing this shift Titan. It's going to grow. And like I said, when it comes to learning a new strategy, when it comes to learning a new concept of trading, it's so easy to get caught up in terms of you want the instant gratification now. You want to be amazing trader now. And a lot of people forget this is a long-term process. A lot of people's egos won't let them go back to a demo account. Like that's one of the biggest tips I can give you guys. When you're learning a new way to trade, whether that's retail, smart money, wherever it might be, like go back to a demo account. Like in B, like I say this every call, in B, we have got the best products in the entire industry, like the entire industry. It's making people results consistently every single day. It's giving out transparent results every single day. Let these products do the hard work for you. Let these products be the account builder for you while you focus on other things, while you focus on learning a strategy, while you focus on learning to become independent by yourself, while you focus on building your business. So don't hesitate to go back to that demo account. It's one of the best things you guys can do for sure, and fully commit to it. Like literally, if you're going to learn something, fully commit to doing it. And don't just fully commit 2 weeks. Don't just fully commit 3 weeks. Fully commit yourself for a 6 months minimum. 6 months minimum. Like since we've been in B, people have joined with no experience, and now they're managing 6-figure accounts, funded accounts, just from learning the strategy and dedicating themselves to the strategy within 3 or 4 months since I've personally been in B myself. Like it's crazy what a bit of dedication can do. But any guys got any more questions? Like feel free to ask some more questions, whether that might be personal questions about trading, about my experience, anything at all. Like feel free to drop some questions into the chat. I will try and get my hands on that account. Sorry, on the video of last week, how to grow a small account. Do you have a channel for smart money concept signals? No, so we don't really set, like for me, like I won't send out signals. Like I'll send out ideas. I won't send out signals. Like signals is never going to do anything good for anyone. It's just going to make people lazy. It's just going to make people become reliant on what you're doing. I will teach people how to do it, but I won't give it to them. If that makes sense. I'll say to people, right, I'm looking at this. I'm looking to get into this trade. I'm looking to get into that trade, but I'm not going to give them the coordinates. I don't want to be doing it for them. But what I am thinking about doing is setting up a Sense group chat or a Sense channel for things like my trade ideas, for things like when I do live calls, so everyone can jump on them. When the group does calls, so it's like a smart money Sense channel. How long should we spend in a day to learn? How long should we spend in a day to learn? Now this is completely personal to the individual. Like for myself, like I used to be a truck mechanic, and I used to love going to the gym. When I got into this industry, like I completely stopped going to the gym. As soon as I'd get on from work, or as soon as before I'd go to work, I'd dedicate myself to learning. Like literally every single hour that I could, I'd dedicate myself to learning. But it's down to the individual and like the times that you get free, but at least an hour a night. At least, like I can guarantee if I looked at your schedule, I'd find an hour on there that you could maybe do something. Replace that Netflix with some wow education, some learning, some back testing, and I swear it's going to do a world of difference in the next few months. Can you transfer everything out of your account and put it into mine? Yeah, no worries, bro. I can 100% do that. Send me your details. I will get the transfer on the go. That's so good. That's so good. How can I learn to improve my trading skills? So what I always say when it comes to trying to improve your skills is, like, confidence within the market is going to come from experience. You're going to get better over time from repetition. If you guys on this call, you're new to trading right now, you don't really understand it, you're a bit sort of lost, like, go back to the first day you ever started your job. If you work a job or you started uni, go back to that first day. You probably didn't have a single clue on how that job worked. You probably didn't have a single clue on that topic you're now studying in university or college. You didn't have an absolute clue. But now over time, you've gradually experienced it more. You've done it every single day. You've got exposed to it more. You become better. Well, I'd hope you become better after a year in your job or 2 years in your job. And it's the exact same thing with trading. The more you're exposed to the markets, the more you're within that environment, the more you're going to see back. Are we going to need the silver or gold package to get in the channel? So the Sense channel is the Sense channel. You need gold to access the Sense channel. So you need gold to access the Sense product anyway. But yeah, so you'll have to have a gold pack for the Sense channel. Where do I get the recordings from? I can send it back into the chat. Do you use fib levels? No, so we don't use fib levels. We use the first and final points of interest. So either 1 or 2 points of interest to take our entry from instead of fib levels. Fib levels don't mean nothing. Like, if you really think about it, like, what's a fib actually doing? Like, what is a fib actually doing? It's just a few lines on a tool, pretty much. It's just a few lines on a tool. So it doesn't really represent anything. Like, if you look at the facts within the markets, we are looking to capitalize on what the banks and the institutions are doing. Like, these guys don't really use fibs. Like these guys don't use fibs, so we don't really need to use them. But if you're happy using them and if you're getting progress using them, 100% use them. Just because I don't use them doesn't mean you guys don't have to use them. Which broker do you use? So I use a few different brokers. So I got a few different accounts. So I got my FTMO broker. I got my IC Markets broker, which is my normal personal bigger account, and then I got sort of like I got four different accounts. So I got a shift account with the VIP trade ideas, and then I've got a smaller account then, which I just sort of try and grow, just a bit of a fun account. Mainly IC Markets, Vantage, and yeah, IC Markets, Vantage. That's my main go-to brokers. How do you structure your day? Like, do you have yeah, raw spread account, IC Markets. How do you structure your day? Like, do you have set hours for trading, backtest, and personal growth? Yeah, 100%. Structure is key. Like, structure is key. And if you guys feel a bit unorganized now, go onto the App Store and download an app called Time Block, Time BLOC, and set that to like an hour each day. So you can sort of structure. So for me, I'll put like the hour I wake up, and then from that hour to the next hour, I'll have something that I do. And I'll always try and fill in the blank spaces. I'll jump on the charts, do a bit of trading, and look at the charts. If I see something, I'll see something. I'll mark it up. If I don't see nothing, I won't repeat that. I won't force any setups. I'll have times when I'll read. I'll have times when I go for a run in the mornings, and then in the evenings I'll have time when I go and train in the gym. So I'll dedicate stuff to myself, personal time, and yeah, time block. That's it. Yeah, it's got a purple logo to it. Ideas on passing challenges like FTMO. Yeah, so within FTMO, like, we've got a lot of the guys within on this call right now. I can see we're FTMO funded traders, and when it comes to FTMO funding, the biggest thing I can say to you guys is do not take it if you're not ready. Do not take it if you're not consistent already. If you're trying to just do it for a bit of quick money or a quick turnaround, then absolutely forget about it. Like literally just don't even plan on doing that. Make sure you are confident going into it. Make sure you journal every single trade. Get yourself, like I can set up the journal that I use. Journal every single trade that you take. Prepare yourself every single day before you're trading, and understand it's a challenge environment. It's a yes, you're only going to make 10%. That's nothing. But when it comes to a challenge environment, it's a completely different ballgame. It's a completely different ballgame. When you have a time limit against you, once you have a certain amount you can't lose, it's a completely different ballgame. So one thing I'm going to say to you is make sure you're consistent, make sure you're journaling, make sure you're following your strict trading plan. That's where a lot of people go wrong. They don't follow a trading plan. And yeah, just make sure you're ready for it. Like that, and sort of strategize yourself. Like how much are you going to be risking per trade? When are you going to be trading? When are you not going to be trading? Are you going to be taking profits and stuff like that? How long did it take you to finally grasp smart money concepts? Oh man, I got introduced to smart money concepts back in December 2019 when I first got into the industry. I didn't understand it at all. I had no one to go to for help. It took me ages to understand it. I was on and off for months and months. So from around July, August 2020 until now, like it's just been going crazy. It's been good. So probably around 4 months, probably about 4 or 5 months, it took me to get consistent with that. What's the best times to look for good setup? So the best times to sort of trade is London session and New York session. New York and London overlap. For me, I'll stop trading around 3 or 4 p.m. Like any more than that, then I'm not too bothered if I miss the trade or not. How do I find my own trading plan? So that you, like, I get asked this question all the time. How do you find your own trading plan? Your trading plan is personal to you. Like your trading plan is personal to you. I can't make a trading plan for you guys. I can tell you stuff you can sort of structure into a trading plan, but it's personal to you. Completely personal to you. Where did I learn smart money concepts? I just learned over time from different people, friends doing it, asking questions, and then just sort of back testing and putting things together. That's how we pretty much learned. Can you show how to add spread? Can you show how to add spread when entering a trade? So how to add spread when you're entering a trade? You'd simply go to MetaTrader 4. You'd see the button. You'd see you'd click on advanced at the top, and you'd see spread next to the pair. And then once you see like, I don't know, maybe like 14 spread, you can add like 1.4 pips stop loss to 1.4 pips to your entry that you're going to be taking on your trading view. How much are you earning? I'm not allowed to give income claims. What sort of stuff do you suggest for a trading plan? So stuff for a trading plan, like time of day, like what time of day you're going to be trading, how much percent growth are you looking for? What confirmations are you looking for? Are you trading the London session, New York session? Let me get mine up. So my trading plan, like it changes, like it changes over time. Like once you go one trading plan, it doesn't mean you go that trading. You don't have to stick to that trading plan for good. Let me try and find this. Cool. So if you guys want to take screenshots of this, feel free to. So this is my trading plan. Some of the stuff in here you can screenshot, like no trading on Mondays. Like I don't trade Mondays. But this is my FTMO account. This is my FTMO account. I won't trade Mondays. risking no more than 1 to 2% each trade, no matter how good the setup looks. No more than 4% risking at each time. A maximum of 8% loss in a week. Have zero detachments to the money won or lost. Trade without a connection to the outcome. That's a big key. Trade without having a connection to the outcome. Only place orders or trades between 8 a.m. and 4 p.m. British Standard Time. You can see I've not updated this right here. Only take a signal that I've analyzed myself and it fits my plan. Must check news prior to events, Forex Factory and Admiral Analytics. So I'll look at these kind of things before. So that's how I will structure my trading plan. Cool. If you guys got any more questions, feel free to plug them into the chat. How do you find structure? You literally just go back to basics: higher highs, higher lows, higher highs, higher lows, and that's exactly what you do. Like, that's as simple as it gets. You go back to the basics in terms of structure, identifying the swings, identifying the lower lows, the lower highs, the breaks of structure, stuff like that. But I can't see any more questions coming in. But guys, I want to say a massive thank you for jumping on this call and actually listening to me for an hour. So yeah, massive thank you. I appreciate your time as always. I hope you've had some value from this call. And a massive thank you to Sahil and Alicia for getting me on this call and giving me the chance to present and speak to the whole Imperial Global. But I shall speak to you guys soon. Take care, and I will get a recording sent out. Take care.